Hey everyone, Mo is here from Wall Street from Main Street. Happy New Year, first of all. This is my first video update for the year 2017, and I wanted to look at a few things for this video. One of them will be Bitcoin. Uh, look at the recent price surge in Bitcoin, and also we're going to look at the US dollar, which recently had its 14-year high, and then also look at the gold and silver market, and then look at the stock market as well. First, let's look at the Bitcoin market. As you may have heard, it recently went over the $1,000 mark, currently at $1,016. You could see here the previous resistance point with about 760 bucks, and it broke that resistance on very high volume. Just remember when you see price action. The volume confirms the price action, so you always want to see heavy volume once an uptrend starts, because heavy volume indicates the strong hands are in the market, and strong hands are usually the financial institution, the money managers, the hedge funds, etc. So you always want to see heavy volume when you see price action. So we saw that, and then we saw Bitcoin go parabolic for the past month. There's a few reasons for that. One of them is in Venezuela, the economy collapsed, and they're currently pretty much worthless right now, because they're presently going through hyperinflation. So a lot of them are using Bitcoin to buy goods online and food. So that's creating a high demand for Bitcoin. Also in China, they're currently enforcing a capital control. They're trying to prevent companies from investing overseas. As you may know, the Chinese stock market and the economy is sort of lagging right now. So they're trying to prevent the money from flowing outside the border and trying to keep it in within the border. So that's causing a high demand for Bitcoin. Also in India, there's a cash crisis. The Indian government has gotten rid of the 500 and 1,000 rupee, and that's hurting a lot of the lower class, middle class people in India, because there's simply not enough cash to make that exchange. So a lot of them are sitting around with worthless 500 and 1,000 rupees. So a lot of them are turning to Bitcoin as well. Um, so if you look at the chart here, you can see it's in an uptrend, but it's gone parabolic. When you see an uptrend, you always want to see a 45-degree angle uptrend. You don't want to see something like this, because that indicate that a violent pullback most likely will happen. I don't know when. I just gotta keep your eye on it, because right now it's in an uptrend, and look for the key reversal. And if you want, you could use the 20-day moving average or 50-day or 200-day moving average as your support. So once it breaks that support, it usually indicate that the upturn is over, and we're most likely going to see consolidation, or it's going to pull back down. So just keep your eye on it if you're invested in Bitcoin. Okay, so let's look at the US dollar. So the US dollar had recently hit a 14-year high, and that is due for many reasons. One of them is the Federal Reserve. They raised their rate for the second time a few weeks ago, only 25 basis points, which is really nothing compared to what they did in the 70s with Paul Volcker when they raised it above 10%, I believe. Also, as I mentioned before, the China capital control and the India cash crisis, and also the Euro bank crisis have the investors flocking to the U.S. dollar. Now, that does not mean the U.S. dollar is a sound, strong currency. It just means that the U.S. dollar right now is the best house in the bad neighborhood. So investors are looking for stability, so they're all flocked to the U.S. dollars just for now. And this can have a major effect on corporations that have exposure overseas. So expect earning revision to happen with the U.S. dollar climbing up. So that's going to affect the stock market as well. So that's something you should keep your eye on. Now let's look at the chart for the U.S. dollar. Now it broke the $100 resistance on heavy volume. You can see here the volume picked up once it broke the $100 resistance level. And right now it's in a uptrend. Went up and then it kind of pulled back and bounced off the 20-day moving average and continued higher, and now it's sort of going sideways. The resistance right now is at 103.60, so once it breaks that on good volume, then it'll probably continue onward. If not, if it breaks the 20-day moving average, keep your eye on the 50-day moving average and then the $100 support at the key reversal point. So if you're invested in the US dollar, that's something you keep your eye on. Okay, so let's go and look at the silver market. Silver, for the first half of 2016, had a pretty nice run. Started at $13.73, and then it climbed upward all the way up to $21.22. You could see here when it had the Brexit, the vote, and the UK left the EU, we saw a nice surge in the price of gold and silver. And ever since then, it pulled back down, and now it's in a downtrend. As you can see, the Trump victory here causing more damage to the downside. And right now, the $16 is the support for silver, and it looks like it's holding pretty good here. Hopefully, it will continue to do so, and bounce off and go up and start a new uptrend. I do think this is the bottom for the silver market. Based on what I'm seeing here, it's having a hard time breaking that $16 support. So I think it's going to consolidate here. Then hopefully it'll go back up. I think 2017 will be another good year for silver and gold. I don't know if it's going to break above the previous high 16, but we'll see. I'll keep my eye on it, and once I see an uptrend starting, I'll do another video and give you guys another update. Now let's look at the gold market. Gold market, same thing. First half of 2016 was pretty good. Started at 1,060, and it went up, then consolidated here for a while. You could see the resistance here. Formed a nice resistance here. But once the Brexit vote happened, then it broke that resistance on heavy volume and went up and made the highs for 2016 at 1377. And then ever since then, just like the silver market, it pulled back. And then Trump victory here caused a lot of more turmoil in the gold market. And right now it's hovering around 1150. Right now, the 1150 is the support level. So hopefully it will hold here and consolidate, and then go back up. So that's something to keep your eye on. Hopefully it will stay above the 20-day moving average and try to make a run for the 50-day moving average, and that hopefully will start another uptrend in the gold market, similar to what you see here. Once it started an uptrend here, once it got above both the 50 and 20-day, and then eventually the 200-day, the uptrend occurred with pretty good volume. And the last chart I want to look at is the S&P 500. So for the S&P 500, I usually look at the SPY ETF, which mimics the S&P 500. For 2016, the market had a lot of volatility. So you had big drops here, and then it shot up when Trump won the election. So this is what we call the Trump rally here. A lot of people were predicting that if Trump wins, we'll see a downtrend start in the market, but that's not the case. Wall Street seemed to like Trump. He brought a few Goldman Sachs executives into the White House, and I think they're buying into his supply side economic policies and all the stimulus and spending program that he's trying to implement once he gets into office. So the Wall Street's not that much concerned about Trump, uh, apparently. Um, so right now, it made all-time high at 22 at 228. Then it pulled back. It's hovering around the 20-day moving average. If it breaks that and continues to down, well, it broke it. But if it continues to go down, um, down some more, then look for the $200 to be the support level. If it can break that, then we're probably in another downtrend. Um, for the S&P 500. Last time we had a concern that the downtrend was starting is when they broke the 200-day moving average, but it quickly went back up when Trump won the election. So the 200-day, the 50 and 20-day moving averages, good indicators to determine an uptrend or downtrend starting. So keep your eye on that, and I will also keep my eye on it. And if I see a downtrend forming, I'll do another video update. So that's pretty much all I have for technical analysis. Be sure to keep your eye out for the podcast that we're gonna come out with in the next few weeks. Hopefully doing an interview with Eric Haddock tomorrow to look at this. He's a technical analysis expert and a psycho expert as well. We had him on a few times. Then also I'm going to do an interview with a healthcare expert to talk about Obamacare and how it's affecting the healthcare industry, and also talk about the FDA. So people that are invested in healthcare, this be a good podcast for you to learn from a healthcare expert what is going on in that industry and how Obamacare is affecting that industry in a good way, but probably mostly in a bad way. So, yep, that's all I have. So thank you guys for listening. I appreciate it. Thank you. Bye.